Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Epstein with your end of the day financial market update, and this is for Thursday, the 25th of May, 2017, about 4:10 p.m. Central Daylight Time. So people are leaving already for the holiday. The roads in Chicago getting crowded. I noticed the building getting thinner in its volume, but the markets soar in the top three indices. It's the Russell, which I've said all along is the weak link. It's the poster child of a market that's still weak, acting bearish, whereas the NASDAQ leads the market to higher prices, dragging the others with them. And as for the thought process that maybe we had made a short-term top and we could back off from there, game over. What else is over? The idea that the big breaks in the market, if you buy them, you don't get rewarded? Not true. New record highs in these markets. Now, at the same time, we saw OPEC today, and they did exactly what they said they were going to do. They came into the market, and they did 9-month extension of the cuts. And yet, here you are down $2.50 a barrel. You're down almost 5 cents in the rebuy gasoline. What gives? What gives is the buy the rumor, sell the fact. The market got no surprises. It had gone up steady for about 8-9 days in front of this, and now you get the news. Market comes down on it. So as we look at the Dow, the high today was 21,095, taking out this area. Now, it didn't take out the all-time high, but it's certainly a breakout to a new high close on the chart, as you can see. And as you look up here, you're going to finish at 21,063. The news will be out. The break that we had right through all this on a close at 20,605 off the Brazilian situation. What Brazilian situation? And remember, in Brazil, the army was called out to quell the streets. Mr. Tamur, it looks like he's going to be out of office. All the problems are going on there. In Manila, they've had to declare military rule, not in Manila, but in one of the islands off the Philippines, that Mr. Duterte's trying to get the ISIS people, I guess it is, out of. So markets don't care about it. They're just moving on up, and look at this phenomenal rally. So you've come off these recent lows and just run in one direction on this market. Pretty impressive, if you ask me, from the 20,474 level right on up. And again, without today's action, we were looking, can the market make a top here? Now, one of the things that I also argued that if you took out 20,995, the market was going to run into a Bollinger Band resistance right above it, and that might just stymie the rally right away. We'll get to that in a second. You're over the 18-day average of closes. You have a bullish bias. The swing line is not trending. You just have a higher high and a lower low. The 100-day average challenge of it that didn't quite hit it has held up. You can't get away from that. And take a look where the market stopped the rally. So, yes, you took out 20,995, and admittedly, when you did so, I thought the market then might make a run to the next resistance point, which it's done. If I'm right, I wouldn't be surprised to see the market back off now a little bit. Not bearish, just back off. You got the weekend. You really want to carry a lot of positions over an event, any event that can happen from basically at the end of business Friday through the Tuesday night opening. Now, while I say that, remember, on these holidays, you get some electronic trading. Yes, I believe Sunday night will be open. We'll close with early trading hours on only electronic sessions on Monday. Then they'll reopen again for the Tuesday trade Monday night. So Tuesday you'll get your full day of trade. But that's how these things work each time. And you get thin volume trades typically. As we look at the slow stochastic, the market is up, but it is in overbought territory. So no getting away from the fact, the idea that a triple top, gone, not there. The market's into a new resistance area, but also new highs. In the NASDAQ, same thing, just running to the upside, overbought condition, over that 18-day average. And again, any break the market's offered has proven to be just a buying opportunity. The S&P right on up, and notice how they all stopped. They could have jumped dramatically over the Bollinger Bands. They fell under them. They went right to them, and they're paying attention to them. That's all that I'm saying. The resistance areas are working. Now, here is a market that could throw out a sell signal tomorrow. Why? This rally high certainly didn't take out that one. If the market breaks down from here and takes out today's low, the first support is again that 100-week moving average of closes. Now, we've seen just recently that as much as it's nice to talk about it, it went through it like it was butter, a hot knife, and then came right back through it. I still have to say that on a break, that'll offer the first support, but because it's under the 18-day average, still not in buying mode. And if that gives ground, the lower Bollinger Band. Is this market telling you eventually more of a correction's coming, or is this market just one that's laying down, and because it doesn't have the tech stocks and the other companies that are doing so well in the NASDAQ and or part of them in the S&P, that it's out of favor? It's probably out of favor. As we go to the VIX, you can see the close. You're back under those lows. You're settling under them. And what a drop straight down. Again, the Brazilian situation, 1630, right on down all the way. So you not only tried to break out to the upside, you didn't carry, and you just fell apart. In the bond market, we know we're getting an interest rate hike. It's just weeks away, and yet you refuse to drop here. You're staying in the bonds in basically a market that is trendless. The swing line is down. The market is over the 18-day average in an overbought area. In the 10-year notes, it is a market with the swing line down. Prices flat in terms of momentum, no longer in overbought area, but any rally tomorrow could create that. And if it should fall, support at the 18-day average of closes. In the dollar index, the market is trying to get a rally going here. It has the embedded reading. It today tried hard to get something of momentum, couldn't get it done, whereas the euro currency tried to break, and it couldn't get much done. Now, if you're going to take a position in the currencies, understand that you're into a market that's going to get thinner in volume really until Monday evening and really Tuesday during the day. I can't tell you what world events will do to those, but remember, American holidays are American holidays. They're not world holidays. So the world's not paying attention to our Memorial Day. We are. In the British pound, you have a pattern of lower highs, and you're now developing the lower lows. You did close under the 18-day average. The trend has turned down the way that I define it. You'd have to take out today's high in order. Actually, you got to take out the 130.52 in order to negate it. Let me correct that. And the first objective, if the market slips here and momentum is pointing down, is 128.77. In the Japanese yen, it is still a stepping ladder down, and it looks as though the market might want to challenge the whole support between the 100-day average and the 18 to see what's going on. Are there a lot of good setups in the markets that we're discussing here? Absolutely not. Now, let me give you the crazy one. This is the crude oil yesterday. You get an embedded reading, all right? Look at the market. It takes out yesterday's high. Yesterday's high was 51.88. Goes up, challenges the upper Bollinger Band, can't get to the 100-day average, and it falls apart, goes down to that line in the sand, that 18-day average where it holds. It loses the embedded reading. Now, in the morning, the first breaks carried down to key support areas, and if you get my subscriber videos, I had shown what I thought the pros were doing, but I was very clear. I said, I don't think they're positioning it. I think they're hitting and running, and that's what they did. By the afternoon, late morning, afternoon, this market just started its roll and let loose to the downside. It's hit its downside target. I want to make this ultra clear. The 18-day average, when you lose the embedded reading, is on that pattern all that it's worth. In the gasoline, you lost the embedded reading. So I'm looking for the market to get down to the 18-day average for support. Could these markets get back those readings tomorrow on a big rally? Yes. Remember my rule. If you lose the reading, the only time you can get it back immediately is the next business day. So you'd have to get dramatic rallies to turn that, and I'm not saying it even would happen, but the odds favor you're going back to the 18-day average. Nat gas, the build that we saw in the nat gas was just too much for the market to deal with. Once it got under the 18-day average, it tried to get up and over it early this morning. I was watching it tick by tick there, and it just failed. Once it got under this number, 326.90, even though it closed better than that, I would not be surprised if it makes a run for the lower Bollinger Band. It needs to see warm weather, and it's not getting it. So let's talk about a few things here. Our Modern Trader magazine. I still want to remind you about this, and I'm not going to advertise it again after this for a bit. 1 year free subscription from Modern Trader. You get every month their magazine. It comes as an email to you with a built-in reader. It's easy as can be to read. You can print it. You can read it. It's easy. Then daily what they're going to give you is also from that. They're going to give you on a daily basis their market called Focus. And then you get these special PDFs. Now let me explain these. This is called Technical Trading Tips from the Top Pros. And they put out on a regular basis special reports, let's call them. This one's optimizing stops, different ways to work in the marketplace. It's something you should get into your library. How do you get this all? You call my staff. You can go to our website at www.iraepstein.com. You can see our carousel of our free offers. Click on any of it and all the forms will appear there. Choose what you want from this individual publication to their magazine. You can choose right here as well. Just click on the icon on YouTube. That'll take care of it. And underneath us it says click here for Ira's free offerings. Do that and these will appear. Choose what you want. I'm Ira Epstein. You have a good day. I'll see you tomorrow with our end of the week review. Take care now.